Let's go to page 5 about Tuan Sing Holdings. We are a Singapore company listed on the Singapore Stock Exchange since 1973 with a market cap of around 660 million and a total asset of about 2.8 billion. Our businesses are mostly in real estate investment, real estate development, hospitality, industrial services, and other investments. And these businesses are located in Singapore, Australia, Indonesia, and China. Next, please. In terms of real estate investment, our key assets are 18 Robinson, Link at 896 in Bukit Timah, as well as the Oxley, which is our headquarters in Singapore. For Australia, we have their commercial centres and car parks next to Grand Hyatt in Melbourne, as well as Hyatt Regency in Perth. For real estate development, in Singapore, our ongoing developments are Mont Botanic Residence and Peak Residence. For Indonesia, we have Opus Bay in Batam and Kura-Kura in Bali. For China, we have an integrated development in Sanya, Hainan Island. In terms of hospitality, we own 2 5-star hotels in Australia, which is the Grand Hyatt Melbourne and Hyatt Regency in Perth. For industrial services and other investments, we own a 44.5% stake in Gaotech, a PCB manufacturer in China, as well as a 80% stake in a small SGX listed commodity trading company called SP Corporation.
I'd like to continue with slide 7 on our milestones for the past 11 years. As shown, we have been conducting our main businesses in real estate developments and investments. So despite COVID-19 situations over the last 20 months or so, our group has been active with the divestments of Robinson Point and Gaotech. And at the same time, we were focusing to complete the constructions of Candice Residence. So we obtained the TOP in April 2021. And this year, we were also active with bidding for the site and were awarded the tender for the site at 870 Dunearn Road with the strategy to combine the adjoining Link 896 to form probably the largest commercial plot of land along Bukit Timah and Dunearn Road. So in 2018 and 2019, the group had completed a land bank acquisitions of Batam Opus Bay, amounting to a total of approximately 125 hectares of land. So some of the iconic and award-winning project developments included our redevelopment flagships assets of 18 Robinson, which TOP was obtained in 2019. And then other projects included completions of Senate Residence and Cluny Park in 2016 and completions of Seletar Park Residence in 2015. So we completed the acquisitions of Robinson's Point in 2013 and we divested this year in June 2021. And we also did the acquisitions of Link at 896 in 2017. So we make strategic investments in Grand Hotel Group that own the 2 hotels, the Hyatt Regency in Perth and the Grand Hyatt Melbourne in 2014. Next slide, please. For our business strategy in slide 8, we will continue to strengthen and leverage on our Tuan Sing brand name and reputations that we have built over these years and expand by scaling up its real estate businesses. So we'll continue to enhance our products with innovative features and develop architecturally inspiring projects. The group remains committed to focus on developing residential and integrated mixed-use development in strategic locations. And we look to diversify our property portfolios to achieve a balanced revenue profile of recurring and trading incomes. So we have embarked on the business transformations to reposition as a major regional player with presence in commercial, residential, and hospitality properties in various key Asian cities across Singapore, China, Indonesia, and Australia. So the group intends to participate through strategic business partnerships or acquiring land bank in large scale integrated developments and township as it enters the next phase of growth. And importantly, we will work to obtain funding with appropriate strategies incorporating discipline, diversity, and develop banking relations and business partnerships. Next, please. Next slide, please. For our key investments highlights, with our competitive strengths, we have been delivering quality real estate investments and developments. We have proven track records and reputations associated with award-winning projects that build on strong relationship with architects, designers, professional consultants. So we have extensive network of potential business partners, which included institutional investors like Macquarie, Mitsubishi Estate Asia, GIC, Warburg Pincus, Lendlease, and so on. We can also tap on our group network of business partners, which included Mitra Adi Perkasa, MAP, Indonesia Prima Property, IPP, and GT. So we seek to diversify our asset portfolios with stable income generating assets. And all this have been and will be done in the disciplined and efficient capital approach. Next, please. As shown in our established track record in slide 12, we have also demonstrated our abilities to deliver unique and high quality projects such as 18R, which is our flagship building, Cluny Residence, Mon Botanic, Candice, Senet Residence, and so on. Likewise, we have also done well to acquire our investment properties that offer strategic locations and unique strength, such as Ling at 896, Robinson Point, the Australia hotels in Perth and Melbourne. The group has achieved an average equity IRR of over 14% for these combined projects over the last 10 years. And similarly, we have also achieved for our commercial investments of equity IRR of 14.6% for the divestments of Robinson Point in June 2021. Grand Hyatt Melbourne is a trophy asset of a 5-star hotel comprising 550 rooms and has been performing very well with occupancy consistently above 90% pre-COVID-19. It has the potential of an AEI with an enhanced plot ratio of above 20 from the current 10. So Hyatt Regency is an integrated 5-star hotel, office, retail, and car parking complex located adjacent to the Fortescue's Center. So the hotel comprises 367 rooms with average occupancy of about 76%. So as highlighted, both hotels have won many awards each year. Next slide, please. Next slide, please. Some of the significant value creation opportunities that we'd like to highlight in this slide 13 here. Our investments in Gaotech is making fruition in that one of its subsidiaries, Gaotech China, has entered into SPAs to divest approximately 15.5% shares in Gaotech Jiangsu Electronics to Yonghua Capital, Wen's Capital, and Xisan Economics and Technology Zone for RMB 519 million, or about 108 million Sing. This transaction has given rise to an implied market capital value of approximately RMB 3.35 billion, or about 700 million for Gaotech Jiangsu. As compared with the carrying book value of approximately 1.5 billion RMB, or about 310 million Sing, there's a huge potential value gain of more than 100%. The onboarding of new shareholders as part of the broader restructuring of Gaotech Jiangsu Shareholdings Capital is in line with its strategic review and positions the company for a possible listing in China. Moving on to the next opportunity, Tuan Sing has acquired the entire 125 hectares of land for an integrated townships development in Batam Opus Bay. So Opus Bay is going to be one of the largest and most exciting projects being developed in Batam. It is located next to Batam Marina Center ferry terminal, and which is one of the 5 ferry terminals in Batam and managed by a private subsidiaries of our parent company, Nuri Holdings. So the development will cater to all age groups of people who are seeking for an alternative experiential lifestyles of work, live, and play at an affordable level. So within 45 minutes ferry ride from Singapore and escape of traffic jams facing the 2 causeways, upon arrival at the ferry terminal, there will be easy door-to-door access through the custom checkpoints to your own residential units. Recently, we have done a soft launch of Balmoral Tower, 381 units out of the 559 units, and the Cluny Villas, 52 units out of 227 units. So despite COVID and without the marketing tools of the show flats and also the traveling restrictions to go to Batam to sell the units personally, the sales has been rather well received from the local Indonesians and Singaporean buyers. So we have recently completed the show flat units in Singapore and are waiting to do a major market launch. So we would like to invite you to visit our show flats at Link at 896 along Dunnan Road. So with this project accounting for approximately 0.9 million square meters and has a potential GDV value of close to 200 million Sing, we see significant future value growth potential in developing the remaining 105 million square meters of land bank. As mentioned, the third significant opportunities is this Grand Hyatt Melbourne, located within Melbourne Central Business District at the Paris end of Collins Streets. It is a 5-star hotel with a total of 550 rooms. So management aims to create a mixed-use development with luxuries, retail, and dining experiences on the existing podium, and an iconic tower comprising premium office space and upper scale hotel cum service residences. So we see significant redevelopment potential here to increase the gross floor area between 50,000 square meters and 74,000 square meters. So when redeveloped, this GHM sites will contribute a very strong rental income annually. Next slide, please. Slide 14. We're also working with strategic partnerships with our shareholder network and business partners to expand our growth synergistically. So the group has embarked on its business transformations to become a regional player with participation in large-scale integrated development and townships. We have 3 such projects, 2 in Indonesia and 1 in China. So the 2 Indonesia projects are Batam Opus Bay and Kurau Kurau Bali. The China project is a Sanya Summer Plaza and a residential site in Sanya. These projects have been made possible through our major shareholders, Nuri Holdings. And through them, we establish good relationship with Indonesia local governments and also with the business partners such as Mitra Anda Perkasa, MAP, and Indonesia Prima Property, IPP. So MAP is a leading retailer and has potential collaborations into Indonesia retail mall business. IPP is a property player with huge land banks for potential development projects. Both are listed companies in the Indonesian Stock Exchange. So the group has also extensive land banks in Indonesia and China. In Indonesia, we have the prime land banks in Jakarta, including Wisma Sudirman, and a sizable land bank in Karawang, which we are currently exploring mixed-use opportunities with significant real estate investors. So with these strategic partnerships, the legal risks of acquiring lands for development in Indonesia and China are minimized, and we can also be capital asset light. In Shanghai, the group has also extensive land banks with development opportunities, and we have positioned ourselves well through a strategic acquisition of 7.8% in Sanya Summer Real Estates, a privately owned company by the shareholders of Nuri Holdings.
We have a diversified asset base that generates a stable stream of income. For 2020, as you all know, hospitality business was not doing well. We lost money due to COVID. However, because of an improving real estate investment business, our total adjusted EBIT only dropped slightly from $61 million to $57 million. For the first half of this year, as we recover from COVID, our adjusted EBIT improved by more than 30% to about $34 million. Most of these total adjusted EBITs are recurring, mostly from real estate investment, hospitality, and other investments. If you look at the pie chart on the right-hand side, our assets are mostly in a stable market, like in Singapore and Australia. However, we also benefit from a significant growth potential, like what Patrick mentioned, from our business in Indonesia and China. Next, please. Financially, we are very disciplined, and we have been lowering our leverage over time. Our total equity has increased to 1.27 billion currently, and our cash and bank balances has increased to about $330 million, which is about half of our market cap. And our leverage, which is our net debt over total equity, has decreased from 1.36 times to about 0.79 times. So financially, we are very strong, and we have a lot of dry powders for future opportunities. Next, please. In terms of P&L, like I mentioned before, we have been very resilient during COVID, and it has been very stable. And during the first half of this year, we registered a significant improvement in terms of our EBIT growing by more than 30% as we recovered from COVID with revenue increase across all segments. And on top of that, we have a sales again from the sales of Robinson Point, and then that pushed our profit after tax to $100 million for the first half. In terms of balance sheets, our cash and bank balances has improved to $330 million. Our total debt has decreased from 1.6 to about 1.3 billion today, and our net asset values has increased from 91 cents to about $1.05 today. Next, please. This page shows you a breakdown of our business segments. Our largest segment is real estate investment, which account for more than half of our total adjusted EBIT. The remainder mostly come from hospitality and other investments. And most of these adjusted EBITs are recurring income. Like I mentioned before, our diversified mix of income allow us to cushion the impact of COVID. And in 2020, despite the loss from the hospitality business of about $6 million, we have an increase from our real estate investment segment with improving occupancy from Link and 896 and 18 Robinson, higher rental yield from Link and 896, as well as stable and long-term leases in Australia. So this improvement in real estate investment, hospitality, and other investment drove our adjusted EBIT to improve by more than 30% in first half of this year. Next, please. This page is familiar. I have gone through that previously, so I won't repeat. I just want to emphasize that our net asset value has increased to $1.05 today, and our net debt to total equity has dropped to 0.79 times. And this is before factoring the impact of the sales of Gautech, and with the completion of a sales of 15.5% stake in Gautech Jiangsu, we expect our NAV as well as leverage ratio to improve further, especially after the IPO of Gautech, which is planned for the next few years. Next, please. Now we want to talk about the impact of COVID-19 and our general business outlook. In terms of Singapore, on the real estate investment side, our rental income has been minimally impacted by the pandemic. In fact, our overall earnings for the segments has improved throughout COVID. For the residential side, we expect buying sentiment to continue to be strong due to the low interest rate environment and ample liquidity in the market. Although higher construction costs and the tight manpower situations may continue to impact margin and construction schedule. In terms of Australia, Hyatt Regency Perth currently operates as a quarantine hotel, and we expect the quarantine business to continue until at least end of this year. Grand Hyatt Melbourne did very well at the beginning of the year with Australian Open. However, the business has been impacted since late May with intermittent lockdowns in Melbourne, as you all know. We do expect demand to improve towards the later part of this year as Australia achieves 80% double vaccination rates and starts to open up. For non-hotel, the business has been doing well. It is supported by long-term leases in Perth, as well as high-quality tenants in Melbourne. Next, please. In terms of Indonesia, we recently soft launched the sales of Marlborough Towers and Cluny Villas in Batam. Despite travel restrictions and lack of a showroom, sales have been encouraging. We expect the recent change in law to ease foreign ownership restrictions and help drive the demand for the property sector, especially those of the top-end residential sectors where we operate in Batam. For China, the sales of a 15.5% stake in Gautech has been completed, and the Gautech Jiangsu is exploring an IPO, and over the next few years, the sales in Gautech is in line with our strategy to reinvest the proceeds from non-real estate business into our core real estate business. This is the end of our presentation.